you're a home investor who wants to learn how to day trade for extra income, you came to the right place. That's what we do on this channel. We teach how to trade the 1/10 size, smaller, less risky, the stock equity index futures, S&P500, DJIA, Russell 2000, and the NASDAQ100, of course. And in today's video, we're going to talk about trends. How do you recognize the trends? How do you recognize when there's no trend? And we'll help you find the best times not to trade. Avoiding those bad trades will up your winning score for sure. And in today's live trade, coming up in just a moment, I'm going to show you one trade that made more than $10 a minute. Now, this is not typical, and I don't want to tell you that you're always going to win your trades. Even if you're good at this type of trading, your winning rate is only around 60%, and that's why you have to be so very careful in trade selection and choosing your trades, and also learning what to do with those 40% of your trades that are going to be losers. Now, you'll have winning and losing streaks like in a casino, but on the law of average numbers over time, you'll win about 60% and lose about 40%, and that's if you actually learn how to do it well. So stand by, we'll have all that coming up and more. Over the last year, I've been busy putting together over 80 free videos here on the channel to help home investors, smaller investors, learn how to day trade the Micro E-minis for income. I've gotten over 175 five-star reviews in the last year with this book. I wrote it the moment I found out that the new Micro E-minis back in May of 2019 were coming online, because it really gives the regular guy or lady, the home investor, a bona fide chance, because they trade 1/10 size. They're 1/10 size of the regular stock equity index futures. And this means they're affordable. When you're trading at $50 a point and you're brand new to it, being up or down $200 or $300 in a matter of seconds can be quite an adrenaline rush. I know, because I've been there and done that. In fact, a story about that, my first big index trade, is in the book. The book, if I'm truthful, all of the information in the book, well, most of it anyway, is scattered among the 80 or so videos here on the channel. We have a beginner's playlist too, especially to help you get a kickstart moving off. But what the book does really is organize the information. It starts at the beginning, goes to the middle, it has an end, it tells you how to practice trade. There's a special chapter in there on trade psychology. You know, we humans are so hardwired to find patterns even when they don't exist. And sometimes when you're trading, you have to be a little counterintuitive to get past that and find successful trades. And I love to talk about rule number 1. Don't miss that video here on the channel. There's a link below. This book only cost about as much as a medium pizza, and I think you probably will make that back. Of course, I can't guarantee anything from the information in the book very quickly. And I'd appreciate you checking it out. You can go to the Amazon book link below, and you can click the Look Inside tab and see the table of contents. Thank you. You know, one of the nice things about learning to day trade or trade anytime with the Micro E-minis is anywhere you have internet, you can trade about 6 days a week, almost 24 hours a day. And remember, rule number 1, the link to that video is below. Rule number 1 is protect your money, your assets. And rule number 2, of course, is never forget rule number 1. The live trade coming up right now. And today we're going to be trading 2 of the Russell 2000 Micro E-minis. Now, they trade for $5 a point in each contract. And when I buy 2 of them, I'll be trading at $10 a point. Now, I'm joining the trade 2 minutes into it. It started at 9:44, about 15 minutes after the market opened. You can see at 9:30 the market went down, and you see the red circle in the bottom on the MACD there, where it did an abrupt turn to the upside. So I'm going to try to jump on top of that momentum. And at 9:44 when I entered the trade, it just went straight up from there, no drawdown. And I was able to put a stop market behind it very, very quickly. at 22.20. Now I'm long the two contracts at 22.21, trading at $10 a point, remember. And my job is to lock in those profits, to use that click and drag feature in my Tastyworks software to try and put that stop order up as the trade matures, and I can lock in some profit. Now, I just moved the stop again to 22.21 and a half, so I absolutely cannot lose any money. The worst thing can happen on this trade now is I make a half a point at $10 a point. That's $5, of course. Now, it's 9:47, and we're 3 minutes into the trade. And I keep looking at the MACD in the bottom, and it looks as though those lines are going to converge. The momentum is definitely trying to rise above the zero line there. I just moved my stop again now up to 22.22. So the worst thing can happen now is I'm going to make $10. It's trading up at 22.26. So that means I've got a 5-point profit, which is a $50 unrealized gain. It's not really called a profit until you've taken it, but as long as it's ahead on the trade, it's called an unrealized gain. I'm trading up at 226, still $50 up in the trade here after only 3-4 minutes in the trade. And of course, I'm going to be watching it very carefully. There, I've got to move the stop way up this time because the market's trading up at 22.27, almost 22.28 there. So I'm up between $60 and $70 up in this trade in a very, very short time. And now I just locked in $50. Do you see how I did that? I moved the stop up to 22.26. I'm long at 22.21. So that would be $60 of locked in profit. And now I move it up to 22.27.60. And the market's trading above 22.28 now, and we'll see how it goes. I'm pretty close to the stop there. Remember, I'm just trying to hitch a ride on some of this momentum so I can make a quick buck. And there you go. I'm stopped out at 22.27.60. Fantastic little trade. Okay, we get to my favorite part, which you know is counting the money. Trade duration was only 5 minutes. We made $66. And remember, I hopped on this trade right after, at 9:30, the market went down. You can rewind and look at this. And then all of a sudden it started running up. I had a couple of big green bars there. And 9:30, close to the opening can be a very volatile time. But this happened about 15 minutes after the market opened. All of a sudden, it just turned around. It hadn't gone down very far, but it turned around and zoomed back up again. And what I did, I saw a fast bus going by, and I was on my roller skates. And I grabbed that sucker and rode it for $66. Or you could say a comet went by, you grabbed onto the tail, and you just take that existing momentum, is my point. You try to find, you'll have a less drawdown in your trades when you hop on an existing momentum. Now, when you anticipate a market change, that's a much more risky trade. So in trade selection, remember, you want to find some momentum, whether it's up or down, that's on the way. Now let's talk for a moment about the type of order I used to get out of this trade with. I had a stop loss order at 22.27.60. Now it was actually a stop market order, and there are things called a stop limit order. And here's the difference. I used a 22.27.6 stop market order. So the moment that trigger price, 22.27.60, is hit, it becomes a market order. In the very next trade, whatever price it's at is mine, and happened to be right there at the same price that was the trigger price. Now, during the day session, there's a lot of volume on these stock equity index futures, and you're not going to lose any money. If it's the middle of the night and a trade's not happening but every couple of minutes, that's a different thing. But there's hundreds of trades happening in the day session. And these micro E-minis have lots and lots of volume, and that means efficient pricing. So you can use a stop market order instead of a stop limit order. Because sometimes when you use a stop limit order, when the trigger price is hit, it becomes a limit order. And if your price and that limit can't be met, it doesn't happen. And sometimes that can be a bad thing. So I just make it simple. Use a stop market order. If you're trading day session, maybe a stop limit order when you're trading Globex or anything that's much thinner traded than this day session equity index things, because they always have a very fast market, lots of volume, and you get efficient pricing. You know, I keep saying, and it's very true, this type of trading is risky. Most people can't make a go of it, and so you don't bet your retirement money or the college funds or anything like that. You have some capital set aside. You can afford to use a small amount of money to be able to put in a type of riskier trading than you might normally do in your long-term investments, like your retirement or whatever. And I'd like to thank my partner in today's trade, the Magic Tastyworks mouse. You know, somebody actually sent me an email one day and said, where can I buy one of those Tastyworks mouse? And was, you know, it's a regular mouse, of course. But isn't that a lot of fun to be able to click and drag that thing right on top of a chart in live trading? It makes it so easy to visualize what you're doing. And Tastyworks has great customer service, and obviously you've seen it on the channel through and through. It has great graphics, and it's pretty easy to learn and operate compared to many other programs. So look for the Tastyworks link below. And don't forget, if you're new and you're not yet up and trading, get that Trade Simulator program. There are links in that to the text right below this video. And you can be up and running in 5 minutes, no credit cards, and it's very, very similar to the screens you see me use here on the channel as I use the Tastyworks broker. I promised you some tips today on trends, trading trends, and you can see in today's live trade, and I know I'm repeating myself, but this is important. You want to find momentum that you can hitch onto and take that ride with it. When you do that, you get a lot less risk in your trade than you do trading a slow or not a real trending market. And I want to show you these spaghetti lines again here. You can see them in this chart down here. Anytime, I always say don't trade spaghetti, but what I really mean is look at the MACD and you see those lines converging and diverging again and again, going back and forth, mingling like spaghetti. That's usually a very risky type of trade, and when you can eliminate bad trades by looking for a few things, it really helps a lot. Another thing that's very, very common is I say trade with the trend, and here's a chart where you can look and you can see the market went up, and even though it lost momentum, you can tell that by the MACD down there, the price really didn't go down that much. And that's just another way to say the trend is your friend. You don't trade against the predominant trend of the day. Are there days that don't have trends? Yes. And back to it again. That's spaghetti time. You've got the market going up and down, maybe in just a small range. And if you're trying to hop on momentum and make some money with that, it's very difficult in that thing. Most of the time when you're trading, you don't have a trade on. You're looking for opportunities, and you need to take that mindset. And when you couple that with the mindset of rule number one, being absolutely dogged about cutting those losers before they mount up and take funds out of your account. So watch that video, rule number one, if you haven't seen it yet. There's a link down below this video. Sure been great today. By the way, you can help me out if you can hit that like button if you want to see another trade like the one you saw today. When you do that, I watch the number of likes on the videos, and it helps me determine what you want to see in the videos. So if you could do that for me, it helps a lot, and ultimately it helps you too, and I appreciate that. I'm Don Singletary. I hope every day is a payday for you, and thank you.